Hello and a warm welcome to a new episode of South Central. You're watching India's first and only business news bulletin that keeps the focus on news from South India as we bring you up to speed with everything newsworthy from across the 5 southern states. My name is Jude Sanant and here's a look at everything making headlines at this hour. As the country readies for a new insurance bill, the insurance sector itself could see FDIs double over the next few years, says Bengaluru-based insurance platform Plum in a South Central exclusive. The Telangana government announces a one-time interest waiver of 90% on property tax arrears. The scheme applies to all residential and commercial buildings within the Greater Hyderabad Municipal Corporation. A special investigations team is all set to summon former Telangana Chief Minister K. Chandrasekhar Rao in a phone-tapping case. The case itself dates back to the BSR's tenure in the state between 2014 and 2023. After Tamil Nadu, Kerala sees a whopping 24 lakh names left out of its revised electoral rolls in the aftermath of the special intensive revision exercise in the state. That's nearly 8.6% of Kerala's registered voters. And the DMK with its allies stages protests in Chennai today against the centre's recently tabled VBG Ramji bill and its omission of Mahatma Gandhi's name in the bill itself. Party says Gandhi can't be removed from the people's hearts. Well, it's Christmas Eve today and there's no better way to ring in the festivities than in South India's magnificent churches and general air of merriment. In Thrissur's Siro Malabar Church, the spirit of Christmas has been beaming bright, even as the St. Mary's Cathedral in Madurai is lit up to ring in the most important festival this year for the Christian and Catholic community. But what's Christmas without some cake? At Bengaluru's Palace Grounds, the city's annual cake show organized around Christmas and New Year has begun, even as Thoothukudi is seeing some unique Christmas cribs reflecting the message of equality. Now, several places have gone above and beyond in Christmas tree designs too, like this 30-foot organic Christmas tree made with 2,800 flowering plants. And that's a wrap of Christmas across South India as we begin today's Christmas Eve edition of South Central. Moving on now, it's being touted as the biggest industry reform in decades, and why not? India's insurance bill could well be a game changer on many fronts for insurer and policyholder alike. At the get-go, the bill paves the way for the long-awaited measure to bring about 100% FDI in Indian insurance. But that's not all. An overhaul of policy measures, including a possible composite license for all insurers and the promise of fewer capital requirements for insurers are both being seen as a catalyst to send the insurance industry into orbit by way of growth, business expansion, and widespread market penetration. In the health insurance space, these reforms come after the segment received a much-needed booster by way of that big GST cut, which brought the average price of an individual health insurance down significantly on the back of 0% GST. That overhaul notwithstanding, the new piece of legislation in the Indian Parliament is bound to see the entry of newer players with possibly renewed reserves of foreign capital ready to take on new markets. To speak to us about how the legislation itself could impact India's insurance industry, I'm now joined by Abhishek Podar, co-founder and CEO of Plum. For context, the Bengaluru-based Tiger Global and Sequoia-backed insurance platform is in the business of helping organizations set up and manage employee health insurance. Abhishek, firstly, thanks so much for joining us on the broadcast. My first question to you, what do you reckon will be the immediate impact of India's new piece of insurance legislation? Sure, the low entry barriers by way of fewer minimum capital requirements, 100% FDI are all there. Do you now foresee a spike in the number of new players getting into insurance itself?
First of all, thank you, Jude, for having me here on the show. I think we're about to see a capital tsunami in the Indian insurance space. Just to give you some context, if you look at the last decade or so, we saw about $10 billion of foreign investment come into the sector. Now, with this 100% FDI, we are expecting that total to double within the next few years. For the very first time, you'll see global leaders. If you look at the top 10 global players in the insurance space, most of these global players have been absent from the Indian market. The big names like United Health, AXA, Alliance, which was originally present and they went out, they have zero presence in India today. These kind of large players will now enter India without the friction of finding a local partner. So that's one part of the story. The other part of the story is not just about the big brands. The bill also slashed capital requirements for the foreign reinsurers from 5,000 crores to 1,000 crores. That's a massive 80% reduction in the entry barrier. What that could mean is we'll see boutique global reinsurers players coming to cover very specific risk. Think of climate change, cyber threats. It could also be specialized OPD health products. These were previously very expensive to underwrite in India. Now, for a tech-driven platform like Plum, what this means is there'll be more partners to build innovative, affordable products for our customers.
Right, Abhishek, what does this now do to competition? While one perspective says that competition will perhaps get a lot more intense and insurers will in fact need to outdo each other by way of product offering, claim experience, so on and so forth, there are some others who say that the newer players, whoever they are, might end up being only niche or regional players, since it's only such players that will benefit from the smaller minimum capital requirements for new insurers. How do you see this panning out?
I think we're going to see innovation at the two extreme ends of the spectrum with very little in the middle. So on one end, I call it the giants of scale. Again, think of the global top 10 companies like United Health Group or even Ping An. For them, India is a scale or nothing kind of a play. For these players who have reached a global uh, maturity, for them, the opportunity cost of their time to play in India is too high to be a small regional player or a niche player. They'll come in with 100% ownership to build really national platforms. For them, if they're playing in the space of health, anything below tens of millions of policyholders is not meaningful enough. So they won't come here to just compete with local players. They'll be here to really build the infrastructure for the next, hopefully, the next 2 or 3 decades. So that's one end, which is really the giants coming into India. On the other end, we should potentially see very global niche specialists, right? So these are not small players, but these are really specialists who will enter into India. And this is where it gets really exciting, really interesting, especially with while the 100 crore capital flow remains the same for the insurers, but because of the reinsurers capital flow going down, we're going to see some of these insurtech pioneers who don't want to be everything for everyone coming into India and playing in those very niche plays like climate tech or health tech. And for these players, we'll see them opening shops in India.
What do you think will be the key differentiator that separates the competition from each other? Now, I'd like to think that the most obvious answer to this question is claim experience, but is there more than that that insurers will now want to work on in order to stand out?
I would put this into three categories. I think what you touched upon, which is claims experience. Claims experience is going to remain the North Star. As an industry, we're still far away from what I call a great claims experience. If you talk to an average policy holder in India, especially from a health point of view, they still feel a sense of anxiety when they enter a hospital. Will my claim be rejected? Why is there so much paperwork? Why is it taking so much of time? So I think the differentiator won't be just paying the claim, but the speed and the certainty of it. Think about turning a 30 days, 45 days reimbursement cycle into a 1 day cycle. So I think claims experience will remain the North Star. That's number one. Number two is, I think, world-class technology will become the foundation for insurance going forward. If you look at these, the current incumbents, the traditional insurers, they're running on really legacy stacks, very old systems that don't talk to each other. Now, these new insurers that are coming into India, that will come into India, they'll build a digital first infrastructure from day one. Think of a back end which is API first that can talk to any other front end. Think of a consumer experience which is mobile first, not some clunky web experience. So I think that's going to be the number two, which is the tech as the foundation. And number three, and I think this is probably the most important one, which most people don't talk about, is the underwriting and the risk selection. At the heart of it, the success of the insurance companies is about how good they are with underwriting and risk. Historically, I would say insurance in India has really lacked depth when it comes to scientifically pricing a risk. And what I'm anticipating is these global players who have seen much larger scale, much larger data at a 10x volume of India. They'll bring in a lot more science and logic to one, how to price, number two, how to select a risk going forward. And the good piece of that is for the Indian policy holders, this could mean that insurance becomes much more affordable if they are the healthier people, or think of motor insurance if they have a car which is safer, or if their driving practice is much safer.
And what kind of growth prospects do you foresee for the Indian insurance space? What's the CAGR that the industry will now experience on the back of these reforms, and what kind of growth prospects do you foresee in the corporate insurance segment?
Yeah, if you look at it historically, see, India is already a very fast growing market. If you look at G20, India is the fastest growing insurance market in G20, right? So I don't want to take away that fact that hey, India is a slow growth economy when it comes to insurance. We have grown at roughly 15% CAGR in the last decade. But with these reforms, which includes the new bill, which includes the waiver of GST on health, what I'm expecting is this sector, and especially the health segment, to accelerate by roughly 500 basis points to 20% CAGR over the next 5 years. What this really does for us is really turbocharge our penetration, right? If you look at our insurance penetration, and one of the ways to measure insurance penetration is the percentage of GDP, and we are at one of the lowest right now in the world. We are at roughly 3.7% of GDP, while the global average is close to 7%. I think this kind of moves with respect to the bills, the laws, and the GST really fast tracks our move towards that global average. So that's the overall context of the industry. If I double click on the segment that we play into, Plum, which is the corporate insurance segment, I think corporate insurance segment is much more interesting from a depth perspective. Again, just to double click, corporate health insurance is already the fastest growing segment. If you look at health within the larger corporate health within the larger paradigm of health insurance is the fastest segment that has grown roughly at a 20% CAGR over the last 20 years. But what I'm anticipating is a further acceleration. I think it opens up the focus on SMEs, which was not there in the last 2 decades. It also opens up corporates underwriting, or basically securing the risk that they were not able to secure previously, because the incumbent players were not able to, they didn't have the expertise to underwrite those risks, or they didn't have the size of the book so that they can take those larger risks. But now these corporates will be able to secure even those very, very specialized risks. So I think corporate insurance segment is going to be much more interesting with the market now opening up.
Well, we'll have to leave it there then. Abhishek, Podar, thanks so much for joining us and breaking down some of those insights. Great speaking to you as always. Moving on to Telangana next, the government here has introduced a one-time settlement scheme for property tax arrears for the ongoing fiscal. According to the scheme itself, the state has said that unpaid property tax arrears can be settled in one go, taking advantage of a one-time waiver on interest charges levied on these dues. In fact, the state has waived off 90% of the accumulated interest on these arrears, permitting these arrears to now be settled with just 10% of the total interest that was levied on these payments in the first place. The waiver will apply to all property tax payers who now own residential and commercial buildings within the Greater Hyderabad Municipal Corporation. The government says the scheme could possibly benefit thousands of building owners with property tax arrears in the city of Hyderabad. And keeping with news from Telangana, a state-constituted special investigations team is all set to summon former Chief Minister K. Chandrasekhar Rao and former Minister T. Harish Rao in connection with a phone tapping case. The case in question dates back to the period between 2014 and 2023, when Chandrasekhar Rao, or KCR as he's more popularly called, was accused of tapping phones of political leaders, rivals and even a member of the judiciary itself. One police charge sheet has claimed that nearly 1,200 phones may have been tapped in Telangana within this period. The case against the former ruling dispensation was filed in 2024. However, the former Chief Minister's party, the BRS, has ever since denied these charges. And only a day after Tamil Nadu saw 14 lakh names of voters deleted on updated electoral rolls, Kerala has seen a whopping 24 lakh names left out of its own electoral rolls in the aftermath of the SIR exercise in the state. A total of 24.08 lakh voters were left out of updated electoral rolls in Kerala, which amounts to nearly 8.6% of the state's total electorate itself. Now, a large chunk of these deletions, that's over 8 lakh voters, the EC-appointed numerators said had migrated away from the state, while voters who were reported as being no more total to approximately 6.45 lakh, while an equal number of voters left out of the list were put down as either untraceable or uncontactable. The total electorate in Kerala now stands at 2.54 crore voters, down from 2.78 crore, which was the case pre-SIR itself. Voters now have time till January next year to appeal the deletions, a crucial step indeed, as this in all likelihood will then lead up to the firming of an updated electoral roll ahead of assembly elections next year. Staying with politics in the south, the DMK has staged a protest in Chennai today, agitating against the centre's recently tabled VBG Ramji bill, the replacement legislation for India's erstwhile Manrega scheme. The DMK's contention is to do with Mahatma Gandhi's name being left out of the new legislation. Led by the company's Rajya Sabha MP R.S. Bharati, DMK cadre raised slogans against the centre, saying that Gandhi's name can't be removed from the hearts of the Indian people. The party has demanded that the name of the Mahatma find itself back into the new bill that the centre tabled in the Indian Parliament rather recently.
The DMK alliance is staging a mega protest in Chennai against the removal of Mahatma Gandhi's name from the Manrega scheme and also the introduction of VBG Ramji bill. In fact, this protest is happening in Medavakam area of Chennai. It is not only the DMK, all the alliance partners of the DMK, they're also part of this protest. We have KV Tangabalu from the Congress, Vaiko from MDMK, K. Balakrishnan from CPIM, Veerapandian from CPI, Thirumavalavan from Vidudalai Sirthigal Katchi, Arunachalam from Kamal Hassan's Makkal Nidhi Mayam and T. Velmurugan from Tamilnaga Valvurume Katchi. So almost 10 political parties which are part of the DMK alliance, they are participating in this protest. The DMK alliance sternly opposes the Union BJP government's move to remove Mahatma Gandhi's name from the Manrega scheme and also the introduction of the VBG Ramji bill. They say that in this current form, the VBG Ramji bill has changed the original funding pattern of the scheme. Earlier, the Union government used to take responsibility for 100% of funds that are needed for the scheme, but now this is being split among the centre and the states. While the centre will give 60% of funds, the state has to take responsibility for 40%, and this will increase the financial burden of the states, is what the DMK alliance says. And they also call the removal of Mahatma Gandhi's name from the scheme completely unacceptable. He is the father of the nation. How can one disrespect the father of the nation by removing his name from a job guarantee scheme, is the question that is being posed by the DMK alliance. In fact, the Chief Minister, Mr. M.K. Stalin, he has injected a language angle into this debate. He says that the new name for the scheme, that is the VP Ramji, this name is not even pronounceable for most South Indians. This looks like a North name, and this is not pronounceable for South Indians, is what Mr. M.K. Stalin says. And we also saw what Congress senior leader P. Chidambaram had to say a couple of days back. He has called this name change the second killing of Mahatma Gandhi. Gandhi was first killed in 1948, and now for the second time, the Union BJP government has killed Mahatma Gandhi by removing his name from the scheme, is what Mr. P. Chidambaram had to say. He has used some very strong words. So now this protest is happening in Medavagam area of Chennai. Almost 500 to 600 people belonging to various political parties, they are part of this protest, and we are seeing representation from all parties that is part of the India Alliance. From the DMK, the DMK's organizational secretary R.S. Bharati is leading this protest. So definitely the heat is picking up in terms of the objection against the new VPG Ramji scheme here in Tamil Nadu.
More news from Tamil Nadu politics then. Earlier this week, actor Vijay made news for his Christmas rally conducted just outside Chennai at Mamalapuram. However, conspicuous by their absence were senior leaders of the Catholic Church and the Church of South India. Now, while some members of the clergy were present at the actor's Christmas rally, the institution of the church itself in Tamil Nadu, some reports say, is keen as not being seen as siding with the actor. This, of course, is in stark contrast to the DMK's Christmas rally held just the previous day, which saw senior clergymen, bishops and senior members of Tamil Nadu's Minority Affairs Commission in attendance. Reports say that invites were in fact extended to senior bishops from Tamil Nadu, but these invitees were conscious of not showing outright solidarity with the actor and inadvertently split the Christian vote in Tamil Nadu between the DMK and the TVK. Shifting focus to news from the real estate space now. First, it was Purvankara in Bengaluru, and now Bengaluru-based Prestige Estates has announced the acquisition of a 25-acre land parcel in South Chennai's Medavakam suburb. The land bank in question comes with potential development of 5 million square feet with a gross development value totaling to about 5,000 crore rupees. Prestige has said that the site will be developed into a large format residential project. The company is banking on pushing the price envelope as well, given the proximity of the land parcel to Chennai's IT corridor and its own proximity to key infra projects like the ongoing Phase 2 of the Chennai Metro Rail. Staying with news from land acquisition now, a day after announcing that high-profile land purchase of over 53 acres near Bengaluru, Purvankara has spoken exclusively to ET Now. In a chat with the channel, the company's CEO for South India, that's Malana Sasalu, delved into details surrounding timelines of the developer's proposed project, its leasing pipeline, and growth prospects in key micro markets within Bengaluru itself. Here's the slides of that conversation.
So we expect that the approvals may take anywhere around a year or so, and after that the phasing will start, and maybe this project will go on for 6 to 7 years. This is more about a scale and large project. So I think it will take around 7-8 years to complete this project. Roughly around, you can say 2,000 crore rupees, 2,400 crore rupees of sales should be coming in the next one after 1 year of approval and within the 2 years of launching. So that should be the pre-sales that we are looking at from this project.
Well, on that note, it's about all the time we have on this episode of South Central. Thanks so much for watching. We'll see you soon with more news and updates from South India. For the moment, it's goodbye from us.